Hey, what is up, everybody? Good morning. Happy Halloween. It is Tuesday, October 31st. This is the Piper Academy Show. I'm your host, Army Piper, coming at you every Monday through Friday at 9:30 a.m. Eastern Standard Time. If you're just joining me and you're just hopping in here, don't forget to do that thing that we always talk about. You guys know what it is. It's the likes, it's the subscribes, that side right there. Hit that thing. And if you're new here, you want to hit that notification bell, get notified every time we go live, bringing you the markets, the news, and the TA. Let's go ahead and let's talk about first things first. It's the white paper day. Bitcoin. Bitcoin birthday from the white paper. So thank you to Satoshi. We appreciate you for what you've given to the world through the power of financial freedom. I like it. So let's go. Shout out to him. Also, we got some news today. We're going to talk about the FOMC. We're 24 hours away from the FOMC, people, and it's not. I think tomorrow we're going to have a big pause again. Just another pause. Nothing's going to happen, but I think that the movement and the volatility that's going to happen tomorrow is going to come from Jerome Powell speaking right after those rate hikes. So those rate hikes, just so you guys, are the FOMC rate drop, which is going to be a pause. That's going to come out at 2 p.m. Eastern Standard Time. At 2:30 p.m. Eastern Standard Time, Jerome Powell is going to come up on stage and start talking. I think we're going to hear a lot of hawkishness coming out of him, and I've got some reasons to back that up. So let's go ahead, jump into the news. We'll talk about that, go through a few headlines that need to be read today, and then we're going to get into the chart to see how we're looking, what we need to be watching for support and resistance. So let's go do that. All right, jumping over into news. Economic calendar, folks. Okay, so today we had employment cost, benefits, and then wages, quarter over quarter. Let me bring this into focus. There we go. Bam. So this is a quarter over quarter, 3 months versus the previous 3 months. And what we're watching here is that we've got the employment cost for benefits came in neutral. It was forecast to actually be down a little bit, came in neutral. So the cost of benefits for employers still staying about the same as what it was in the previous quarter. However, employment wages, this is the wages that it cost for to employ what they're paying out to their employees. So it was at 1% the previous quarter. The forecast was that it was going to be 0.8%, slightly down. Actually came in at 1.2, beating the expectation, meaning that it's costing them a little bit more for wages, meaning they're paying people more. Yeah, we're going to talk about that. I think tomorrow we're going to see some pullback. What's up, Crypto Seth in the house? Elo Brown asks, "What do you think, Army? We're going up by the sound of it." There's no question mark, so it's a statement that he's making, and I think that we could see some pullback tomorrow. I'm going to talk about that. That's why I said, 24-hour warning, because this right here, and I'll explain how this all plays out. I'm going to give you the knowledge, I promise. So the employment wages were up and beating expectation, so they're paying people more. Okay, employment cost overall between benefits and all that and wages is 1.1%, still beating the forecast by 0.4%, and beating the consensus even. So that's what we are watching there. And why does that matter? Well, let's talk about that. Oh, well, first off, let's get down here and show you tomorrow. Right here, Fed interest rate decision. This is 12 p.m. my time, 2 p.m. Eastern Standard Time. And then there's that Fed press conference. And then on Thursday, we're going to get some jobless claims, non-farm production, so on and so forth. Why that matters? Well, we've already talked about, let me refresh this, that tomorrow we're going to have 97.1% chance of a pause. There still is a 2.9% chance of a rate cut. I don't think that's happening yet. December, let's jump over there. December, we're looking at 68.9% chance of a pause. But now for December, there's a 29.1% chance of a rate hike. I think after tomorrow's speech with Jerome Powell, I think we might actually see this number come up. Liquidations real fast, and then I'll get into that data. Past 24 hours, 43,563 traders liquidated, 95 million total. Largest single liquidation, 2.97 million on a single liquidation. Hashtag learn to trade, or hashtag I need your kind of money. We're going to get into the 5 things. I want to talk about this U.S. unemployment. So here we go. U.S. employment cost increases 1.1% on a pickup in wage growth. So here's why this is important. The U.S. employment costs unexpectedly accelerated in the third quarter, heightening concerns that a strong labor market risk keeping inflation above the Fed Reserve's target. The employment cost index, a broad gauge of wages and benefits, which I told you it's a combination of both of them, it increased by 1.1% from July to September period, rising 1% in the second quarter. Um, so here is some two key things here, actually. While the wage growth picked up slightly within private industry, salaries at state and local government surged. Okay. The median estimate that the economist from Bloomberg called for was a 1% rise, even beat his. Compared with earlier, the ECI was up 4.3%, the smallest annual advance in 2021. So the number looks good. And I guarantee you, we're going to see politicians coming out talking about how good everything looks. But what we're going to see tomorrow is Jerome Powell coming out saying that it looks too good and that this is going to fuel him to be hawkish and that it's going to fuel the likelihood of a rate increase later on in the year, possibly early 2024. So while there are a number of other earning metrics here, including hourly earnings figures from the monthly jobs report, economists tend to prefer the ECI because it's not distorted. It's pretty. This is pretty good data that they look at. So while it seems like a small thing today, it was pretty important for what we can use as a indicator for what Jerome Powell is going to do. I do find it interesting though that a lot of this was from a lot of this came out was from local government surge. If you look here, the federal government employs roughly 2.1 million people, making it the largest employer in the country, and that's just the Fed. So this was talking about the big jump in state and local governments. Guys, where does the profit margin come from in government to pay for all those employees? It's not a business. It doesn't make money. They tax it from other people. So this is just actually more debt. This high number coming in on government employees is actually debt, not that's not profits earned. They're not turning around and rolling their profits back in. Crypto Seth said, hey Seth, how you doing, bro? Hey, good video you did with Tim the other day and T-Shroom. That was a pretty good video. I watched it this weekend, bro. So yeah, if you see this coming in like this is just propping up using our own money, not new money, to pay a bunch of employees to make the numbers look good. So this is actually not a good thing, even though people are making more, a majority of it coming out of taxpayer dollars. So, and then lastly here, we had a BC letter thing on it. So let's talk about this. He said, just about every metric has shown inflation and reaccelerating over the last couple of months. Core inflation stands near 4% and remains incredibly stubborn. Meanwhile, the unemployment rate stands at 3.8%, near its lowest level in history. As time goes on, it's becoming more and more clear. Likely, the only way to get to that 2% target is through higher unemployment. A recession may still be needed to tame inflation. You can see here on the chart, core services CPI is this blue on here, and then the Atlanta Fed sticky CPI. It's all, look, all of the different CPIs are all pointing upward. So not actually coming down, and with them paying more, that means, hey, look, labor's good, employment numbers are good. The amount that everyone's getting paid is good, which also means, by the way, if wages are coming up, that they're more likely to be less likely to be afraid of debt. So they're going to keep increasing their credit card debt and all that too. So you guys got to be careful out there. These numbers that are coming out, whether you look good, the combination of them all together is actually bad. So, like I said, tomorrow, FOMC numbers, likely a pause. Jerome Powell's speech, likely hawkish, and this is probably going to pull the markets down a bit. So that was what I wanted to show you on that. Already showed this over on Investing Bros, but I just want to touch on it. Legendary billionaire just flipped on Bitcoin amid $300 billion Ethereum, XRP, and crypto price boom. Who is it? It's Drunken Miller. Stanley Drunken Miller admitted that he should have had more Bitcoin. T-Shroom is right, though. You didn't buy. Now, if you said I should have had it and now I'm making up for it and buying it now, then that would be the thing right there. Candle Daddy in the house. What's up, bro? Okay, so let me get rid of the ads here because lovely ads. This is for the people in the UK. UK to regulate crypto and stablecoins with the finalized stringent rules. This just came out last night. I believe one of our peeps over there in Investing Bros dropped it on Discord also. Let's take a look at what it is here. UK government has disclosed its ultimate set of rules for the regulation of crypto assets and stablecoins. It represents a milestone, significant milestone, they said, in the nation's approach to digital currency. The UK government's regulatory strategy outlines a phased rollout of crypto rules. So it looks like over 2024, we're going to start seeing a stack on build of regulation to say, hey, this is how we have to operate and implement crypto within the governance. This announcement from the government follows a consultation process initiated earlier this year. It demonstrates its dedication to tackling the regulatory complexities associated with the crypto domain. The proposed legislative framework is slated for implementation in 2024. So, could we see something like this come out in the U.S.? Maybe, because this now there's a framework, there's a build of how it should look, and now we can take that model and try to do something with the United States, hopefully, because sadly we do need regulation here in crypto. So, and I think it would help with the institutions getting involved into crypto, because now they have left and right parameters. So let's jump over to the charts. Let's take a look at what we're seeing here. That is the news for today. We're going to look at the charts. Look at the chat here, I should say, and see what's up. Big up chat. Crypto Seth said, thank you. You're welcome, bro. I got to get on to a live stream, show off your TA. Oh, you got to get me on the live stream. Seth, hit me up, man. DM me, hit me up on, on either Discord or over Twitter, man. We'll get together. Or X. X now. I know. Sorry. Yart Candle Daddy said, Ihachi Tobias in the house. What's up, brother? How you doing, man? B10X regulation. You're in the UK. Well, looks like you got something coming your way, man. And Nancy Croy with a good morning, everybody. So let's go ahead, see what we got going on here. Looking at Bitcoin. First off, coffee break. There's today's coffee cup. My rights don't end where your feelings begin. That's what it says today. So let's take a look at my favorite chart here, as you guys like to say, just to show you where we are here in the process. This is a weekly Bitcoin chart. For those that have never seen it, it is a Fibonacci channel. Goes all the way back through the history of Bitcoin. So there you go. Now you can see it. I've been watching it for quite a while now. And as we are sitting here in our new week candle that just started opening here, sitting right in the middle of the phase 2 block that I'm watching there. Typically, phase 2 tends to run up to the 618 up here, and then also stays down, above the 50 line down here. So that is what I'm watching, is a play in this box here for phase 2. We do have the 786 showing very strong support. So even if we break this 50, I'm looking at this diagonal 786 to give us a little bit of support to the upside. Watching that phase 2, and I'll be giving an update on this weekly. So that's where we are, starting right in about the 50% line of the phase 2 block. Let's go jump over. Let's check out what we got going on here in Bitcoin. Bitcoin still bouncing off of that resistance line of the 786. I told you I put the T-box up here, which is actually wicking up to the trade band, the upper gold trade band of Chart Prime's predictive ranges there. So that's where I did that box. That is going to be the rejection zone that we're going to have to bounce up in, get support on that 786 and break this for me to continue my bullish stance. But as of right now, it's a hold mode, and we are just loitering on target right there with this nice trend line of support bouncing down below. If we take a look here at the oscillator, looking at the 4-hour chart, we are about to do another pinch here on this 0 line. Typically, when we see that on the ribbon, you can see a lot of times when we're in that range, that is where we tend to flip back up to the upside. So, being that we're above it and we're about to get a pinch, this does look like we could be heading a little bit upside going into the FOMC in the morning. Yeah, that's Bitcoin. Let's go take a look at ADA and see how ADA's looking here. I told you guys yesterday, ADA was in this trend line. I did my nasty, dirty drawing here of my ascending wedge here, right? So over, let's see, this was Monday in the afternoon. this would be the morning right here. I said, look, if we hold this line, then this is pretty good. Well, we came down. We even wicked down and retested that diagonal support there, and now we're still sitting above the 50. So ADA looking pretty decent today. I would just be watching that we hold that trend line. Let me go ahead and put a real trend line on here for you because that was just a dirty drawing that I did yesterday. That's all I did. Let's go do this. Let's make this into a solid line, and there we go. So there's that trend line that I've been watching. We are breaking above that horizontal resistance, which has now been retested as support. Right now, we are just sitting below it. So watch this area. Watch this 50% and this diagonal. That's going to be the area that we have to get above, hold as support, retest, and then continue upwards. So far, so good. Shout out to all the ADA holders out there. Ethereum, let's go take a look at what we got going on here with Ethereum. On Ethereum, folks, we are still sitting below the value area high. I put a little volume profile, fixed range volume profile on this flag that Ethereum's got going on here. And you can see this upper purple line right there. That's the value area high of the fixed range volume profile. If we bring this over, you'll actually see, there we go. You can see these little mountains over here. There is actually a mountain that we're sitting, that we rejected off of perfectly, which is right there. There it is. Watch for the point of control at 1789. Might be, if you take a look at the hourly, might be a decent time to get into a little quick scalp. If you're a scalper out there, not financial advice, do your own research, but I would be watching for that since it seems to be holding pretty well. Value area high. Yeah, it's basically just grinding sideways, guys. Ethereum has been a little bit boring lately. If you take a look, though, at the oscillator, it does look like we do have a chance for some downside. If we do fall on this hourly and cannot hold that point of control that's coming in right there at 1789, be watching for the dynamic reactor or the trimmed assist being overlapped right there in the range of about 1780. And that would be where I would watch for support there on the hourly. Let's take a look at the daily real fast and go the big way. Let's go up big side. Here, looking at the daily here, we are above the 382. We are currently, folks, these yellow lines, these are exponential moving averages. This is your 50 is the green one. This yellow one is your 100. So we are currently sitting right below that 100 moving average on the daily. So something to keep an eye on there. But again, that 382, 1758, between 1758 up to 1789, good range of support. Let's go back to the 4-hour chart and let's go and jump over, check out some chain link, see how we're looking here. There's that nice bounce that I had on the T box there. Said this would be the support range. It didn't even make it in. It literally touched it, bounced up. Right now, currently, Chainlink still fighting on that 50% line. Anything below the 50, I consider bearish. So until it can break above that 50 Fibonacci there, that is coming in at $11.62. I am going to consider this to be under resistance, which means bearish mentality on it. Doesn't mean I'm selling it or anything, but definitely not buying at this level. Taking a look here, you can see that we've had multiple bullish divergences that kicked in here on the Oscillator Pro, but it does look like we are about to get another twist here. We've had one here previously, did a little pullback, and that's what it looks like we're doing right now. Still holding right there at that daily support, that purple line running across, that is $11.22. And that is your daily close there. So that's going to be your daily support level. Let's see what else we got here. Cosmos Atom. Cosmos is sitting inside of its platinum pocket right now. You can see it got a perfect retest yesterday on the golden pocket before bouncing up. Came up rejection on the 786, retest of the 0.66 there on the golden pocket, and then push back up. Now sitting inside that platinum pocket. I would be watching $8.28 on Cosmos Atom. I know a lot of people are holding this because of its interest rate that it pays out for APY. So if you're one of those people and you are looking to get more, be aware we're in the platinum pocket, famous for rejection. So we made it above the golden pocket. That retest would have been the time to get some. But if we do come back out of this and retest, if we do come back down and retest the 786 here, then that might be a chance if you want to DCA a little bit in, not financial advice. But ultimately, I'd be watching for this golden pocket again for for another APY pickup um, for the earnings on Atom. There we go. Solana sitting above the 887, continuing to grind it out. Shout out to Tim yesterday talking about the 100x coin that he picks. It was Solana. Yeah, sitting there above that 887 there on the platinum pocket. Also, as I've showed you guys before, the trade band typically on the predictive ranges, there's the upper trade band, there's your delta median. This yellow line running right underneath there, you can barely see it. There we go. We can see it now. That is the bottom trade band. Typically, price tends to trade between this range here to this range here. Interestingly enough, we are just above the lower trade band. So it is quite possible, and it's not going to be a straight up, don't get me wrong. If we hold this platinum pocket as well as bouncing on that lower trade band, get above the 1-to-1, which is going to be major resistance at 38.79. Why? Why is that, Army Piper? Can you tell me why? Yes, because it was previously 2 points of a double top of resistance that we rejected off of. Now we got it sitting as resistance above us again. So let's see if we can get up there first. If we can, and we break that 38.79, be watching for the delta. That's going to be your next resistance point. That's coming in at $41.78. If it can get up here, start getting all this movement, folks, I do believe it's going to come to the top of its trade band sometime in the near future, and that's going to be coming in at about 48.50. Is there any significance back there? Oh, well, yes, there is. Look at that. What do you know? A 48.50 mark. That would be a liquidity grab just past that previous range back there. So there you go. That's what I'm watching for on Solana. Let's clean this off so I don't have all this garbage on there all weekend. There we go. Caspa. Eric Wallen, you made it. Glad to see you, brother. Taking a look at Caspa here. Caspa had a double top here on the 887, the platinum pocket. It is now back in its golden pocket. And so this golden pocket has been extremely strong for Caspa going back. Just like the platinum pocket has been a resistance point. We have been recently going back as far as October 20th here. So we're about the last 2 weeks there almost. We have been getting good bounces in the golden pocket. So I'm going to be, oh, don't do that. Come back for me. Thanks. Why don't you bring it back like you left something? There we go. Yeah, so I'm going to be watching for this support range right here, coming in at approximately 4.9 cents, 5 cent range. Well, I guess it would be 4.9 cents because 5 is going to be like up here. But yeah, watching this 4.9 cents here, you can see it 0.049033. That would be the 618. And as long as we can hold that as support, I think Caspa going to be okay. Need that golden pocket to maintain its golden goodness. What else we got here? XLM up a little bit today. Oh, there was something I was going to show you guys. Jump back over here. Bring it back. There we go. There is... Come here, you. Get out there. Let's go to my bookmarks. And then we're going to go to this. So, yeah, these are major events that were taking place this week. Protocols with major events taking place this week. And you guys can see here yesterday, Stellar Lumens had a protocol review. Okay. Protocol Optimism had a token unlock yesterday. Today we got Tezos with the MetaMask Snaps integration AMA. So they're doing a little Ask Me Anything. Binance Pay integration for Fun Token today. Helium. Shout out Helium there. Doing a protocol report for Q3. That's going to be today. And then Neptune lending and for Injective. So guys, take a look at this. Snapshot this screen. This stuff right here, probably going to have some movers off of this today. A lot of volatility. If you like to play the volatility, check those out. That's what we're looking at there. But you can see that we had a lot of movement on Stellar Lumens. Back to the chart. Pumped up nice and clean there, and now pulling back to the downside on the 4-hour with that data coming out from that protocol update. So Doge down 1.7% today. The Dixie, let's take a look at the Dixie. Dixie getting a lot of nice movement here. Guess we can take all that head and shoulders stuff off there because that's done playing out. It actually was down here. It almost hit up to the point, so not bad. Now we're getting another big candle today on the Dixie. Why are we doing that? Gold. Guys, I was telling you that gold back here on the 50. For those that do not remember, back here on the 50% line, I was telling you that gold was heading for the golden pocket. You see it went up, retested that resistance line, which is now support on Chart Prime's predictive ranges because they're beautiful. Double bottom on it there, had a wick down but closed the candle on it, back into the golden pocket and then shot up. I believe, like I've said over and over, we're heading for the platinum pocket on gold. That is going to be a range between $2,023 to $2,050. So 2025 to 2050. That is what we're looking at there on the target for gold. Not financial advice. Got to keep saying that because I'll get canceled. And if they cancel me, I can't bring you the info. If they cancel me, I'll just sit at home, no harm, no foul. But I would miss giving you guys info that you guys want to hear. So, yeah, that's what's going on with gold. What else do we have here? Let's look at the futures. Stock futures down today on Dow Jones for our opening this morning on futures. The ES1 a little bit down and NASDAQ down. Bitcoin dominance sitting there on a slow grind to the downside, but nothing major going on here with it. It's not like big candles drops like it pumped up. So still sitting at 53.79% there. A little bit of money pulling out of the total too today. You can see these red candles. It's just people getting prepared for what's coming tomorrow. They don't know. The uncertainty makes people go risk off. It happens. Last but not least, let's go back up. I want to show you guys, see how Tesla's doing today. Oh, thank you. Tesla's finally getting a green candle for this first time in a while. Yeah, if you guys don't know, my Tesla stock kind of beat me up a little bit. Took me to the back room, put me in a corner, and roughed me up. So, yeah, I'm okay. But, yeah, Tesla getting a little rebound today there. Amazon, though, sitting with a nice doji. Google had a little bit of movement to the upside, but it hit that lower trade band as resistance, and it looks like it might be coming back down to that 122 mark there. Love my coffee. Yeah, that's what I got there going on. Clean spark for Eric Wallen since he made it back to us. Eric Wallen, I told you, watch for that golden pocket. It's sitting there holding. It is your support right now at $4. So there is your support for Clean Spark. And we do have a 4-hour about to pop up again on this ribbon, it looks like. So pinching and pulling to the upside. So you could get another little movement back up here, maybe coming back above the dynamic reactor. Here, let's draw it out. We're going to get this back up here, get a little bounce off that dynamic reactor there, and maybe come back up to retest that 50% fib. That would be what I would think would happen with it here. So USD pumping after GDP data and employment cost. Yes, it is because the dollar is moving. No, I'm not live 1 hour before my normal time. This is my normal time every day, bedridden. The time change for us, I believe, is next week. So next week will be the time change for us. But yeah, so the GDP, the data that came out on employment numbers, our wage cost, is making everyone think that the Federal Reserve has what they need: low unemployment numbers, good wage growth, good labor force, which means that they have that flex room to do some rate hikes. So the dollar is now, when things get risk off in the investment world, people tend to run back to the dollars. So what is the Treasury yield today? Let's see what the Treasury yield's doing before we go, though. 10-year Treasury yield. Come here, you. Right there. There we go. Yeah, Treasury yield's even coming up a little bit, but that 5%, I told you that 5% is going to be the mark to watch. If we break that and we hold, don't do that. If we break that 5% mark and we hold it, that's going to be devastating for the markets, at least for stock markets, TradFi. Not sure exactly how that's going to play out on the not sure how that's going to play out on the other side of the fence with crypto. So we'll have to take a look and see. All right, let's go ahead. Let's jump out of here. Let's come to here. Guys, I appreciate you guys joining me today. Little updates on the markets there, but hey, tomorrow, FOMC, data coming out. I told you guys, probably going to be a pause, very likely a pause on the FOMC rates, Fed rates, and then Jerome Powell is going to get extremely hawkish in his speech, I believe. So we'll see. Could be a good opportunity to get in to some trades because there's going to be quite a bit of volatility, but it's also going to be a good chance to see if we come down and catch some support for those that missed this last run up. Maybe it's a good time to get in to a little bit of those assets that you want to be holding for this next run because it's coming. It's coming. I'm telling you. So thanks for joining me today on Piper Academy. If you guys haven't done so yet, hit that like, hit that subscribe, hit that notification bell if you're new here. Appreciate you joining me. Also, if you guys want to get the chart prime indicators, link down below, get 45% off at checkout. You can see how they play the support and resistance a lot. I love using them. I love trading with them. They did me very well last year. Yeah, I appreciate you guys joining me here. Catch me tomorrow morning, 9:30 a.m. Eastern Standard Time, taking a look at the market tomorrow before the FOMC so that we can be ready, be prepared, and have some knowledge. Why? Because knowledge is profit on Piper Academy. I'll catch you guys tomorrow. Trade safe, stay primed.
That was awesome, dude!